Hi friend, it's Janet from Paper and Spark. Welcome to the Inventory Crash Course Workshop. We're right around year end and it's that time of year where us makers and artists tend to get stressed about what to do when it comes to dealing with inventory. So in this quick video, it's going to be about 20 minutes long. In this crash course, I'm going to give you a basic overview of everything related to inventory when it comes to taxes and bookkeeping so that you can feel prepared to deal with year-end and taxes. In this workshop, I'm going to be covering 3 big inventory concepts. First, I'm going to explain exactly what inventory and cost of goods sold means to you. I'm going to define those concepts. Second, I'll walk through the inventory and cost of goods sold section of your tax form, the Schedule C. And finally, I'll discuss exactly what you need to do when it comes to performing a year-end count of your inventory and materials. Now, this crash course is a preview or a snippet of the 2017 Bite-Sized Bookkeeping Bootcamp, which is a course that I've created especially for makers and artists. The biggest struggle that I hear from Etsy sellers and other creative entrepreneurs this time of year is that they have to catch up on doing an entire year's worth of bookkeeping before the tax deadline comes around. That's super stressful and causes a lot of anxiety for us. So I created the boot camp to help you do exactly that, but without the stress, anxiety, and overwhelm. The boot camp is designed for makers specifically to help you catch up on your 2017 finances if you're behind from procrastinating during the year. It's all about getting your books completed and getting everything organized for taxes, but in tiny, manageable, bite-sized steps. You can learn more about the course at etsybookkeepingbootcamp.com. Now let's get started. So let's begin by giving you a general definition of inventory. If you sell physical goods, you've got inventory. For tax purposes, inventory includes 3 things. Your unsold finished goods, that's whether you've got them listed online, whether you've got them sitting in a stock room, or whether they're just sitting around anywhere. Finished goods are inventory. Your works in progress, which are items that you're currently working on but you're not finished making. And your inventoriable raw materials and supplies, which I'll cover more about in a minute. My biggest point here is that inventory, unlike what you might think, is not just your finished goods. It includes most of your supplies too, which might be a pretty hefty dollar amount if you're like a lot of crafty people. I know I like to hoard my sparkly things and buy my fabric in bulk, so I have a lot of money tied up sitting around in my inventoriable supplies. So back to inventorial supplies, which are included in your inventory. What exactly are those? These are the materials and supplies that go directly into your finished goods and are traceable. So that's going to be things like, depending on what you make, fabric, zippers, buckles, beads, cabochons, felt, cups, paper, etc., depending on what you make. All these types of supplies, these things that go directly into my finished goods and that are easy for me to measure or trace, are considered inventoriable supplies that must be part of my inventory amount. Now, to make things more confusing, there are some supplies and materials that we might have that are not considered inventory. These are going to be things that either don't go directly into the goods you sell, like scissors, the sewing machine, paintbrushes, etc., or they are things that do go directly into what we sell, but it's super hard to trace or measure them in the finished product. That's going to be things like glue, thread, or printer ink. We call these types of supplies incidental. That means that they are not part of your inventory and you can just deduct them in the year of purchase like any other old business expense. So, you might be asking yourself right now, do you have inventory? So, what if you create handmade goods? If you've got handmade goods, you've got inventory. You probably have supplies sitting on your shelf that you make your inventory with, and you might have some already made items sitting on your shelf, or you create products on demand. So if I don't have finished goods sitting on my shelf, maybe I don't have inventory. No, sorry. You still have those raw materials and supplies that you either buy when you need them or you have sitting on your shelf, and those inventoriable materials and supplies are considered inventory. So even if you create products on demand, you still have inventory. What if you use a drop shipper? One of my businesses, I order items on demand as a customer orders them, and they're shipped from a third-party printer. I don't keep anything in stock. I don't have any inventory on my shelf. So it is true that I don't have raw materials and supplies that are considered inventory, and I don't have finished goods sitting on my shelf that are considered inventory. But I still have costs of goods sold, which we're going to cover more in a minute. So I still have to deal with inventory. If you're a reseller and you purchase items at wholesale, mark them up, and then resell them, you still have inventory. This might apply if you're like a vintage seller or a supply seller on Etsy. You still got inventory. You don't have any of those raw materials and supplies to deal with because you're not creating things, but you still have inventory and cost of goods sold to deal with. What if you sell digital goods? Well, my friend, you are very lucky and you can just stop watching this presentation, because if you sell digital goods, you don't have inventory. And if you sell just services, you don't have inventory either. So those are the only two scenarios I could think of where you actually don't have inventory: if you're selling digital goods or you sell services. So what is cost of goods sold? Cost of goods sold is so important because it's a timing issue on your tax return. Now, most business expenses you can deduct in the year you purchase them on your return, but that's not the case when it comes to the inventory and inventoriable supplies. These cannot be deducted until the year you make the item with that supply actually sells. This deduction is called your cost of goods sold deduction, or COGS for short. So let's think this through. As a maker, you probably buy a bunch of supplies and materials to make your goodies. If you sell jewelry, you've got tons of sparkly beads, stones, wire, chains, and more hanging around. If you could deduct all of those supplies in the year that you bought them, you could just buy supplies all day long to lower your tax bill. The IRS doesn't want you to do that. So you can't deduct the cost of that material until the piece of jewelry you make with it is actually sold or purchased by a customer. We have to track our inventory amounts from year to year for tax purposes, and our inventory is considered an asset, which is a term that you might have heard before. It's basically like a future benefit with no current tax consequences, and we consider it an asset until it sells. When it sells, it then becomes cost of goods sold, which is a tax deduction. So every year we've got to be ready to report to the IRS what our inventory amount is. Now that we understand a little bit more about what inventory and COGS actually are, let's take a look at how they're reported on your tax return. Now this is a screenshot of page 2 from your Schedule C, which is the form that you're most likely required to fill out for your business each year. Page 1 has got all the usual stuff like your total sales and your business expenses, and then page 2 has got part 3, which is especially for calculating your COGS deduction. Taking a look at part 3, let's go line by line through the calculation. First, we have line 35, which is beginning inventory. This should be 0 if it's your first year of business, or whatever amount you listed as ending inventory last year would just roll over to this line. Next, we add line 36, which is your purchases for the year less items withdrawn for personal use. This is going to be the cost of any goods that you buy at wholesale or at whatever cost to resell. So think about items that you buy and then mark up and sell to your customers. That's what would go on this line. This is also the line where you're going to make sure to subtract out any supplies or finished goods you end up removing from your inventory stash for personal use. Line 37 is where you add in the cost of labor. Note that it says don't include any amounts paid to yourself. So we don't include any salary or wages that you pay yourself from your business. This is only if you pay employees for help in making your goods. Line 38 is where you add in the cost of your inventoryable materials and supplies. So all those items that we discussed in the previous slides, the supplies that you buy to create the goods that you sell. And something that I want to note here, there's some confusion with the difference between line 36 and line 38. I've heard different tax experts use those lines interchangeably. So some people will advise you to put the cost of your inventoryable supply purchases in line 36, and some will say line 38. To me, it doesn't matter. I don't really think there's a right or wrong, and I don't want you to get confused about which one is which. The most important thing is that you just pick a method and which term makes the most sense to you, and be consistent from year to year with where you put those inventoryable supply purchases. Next we have line 39, which is other costs, and I've never really seen anybody have to use that before. And then we have line 40, which is just adding all of those items together, and I like to call line 40 the cost of inventory available for sale. This basically represents the cost of all those finished goods sitting on your shelf waiting to be sold, and the cost of all those inventoriable supplies and materials that you use to create your finished products that are also still on your shelf. So then we have line 41, which is your inventory at year end. That's the cost of all the finished goods and inventoriable supplies still sitting on your shelf as of December 31st. We subtract that out from line 40 and we get our cost of goods sold deduction. So this tax form is basically having us say line 40 minus line 41 gets us your cost of goods sold. Think about that a little bit in real world terms. Line 40, which remember represents everything we started with this year, plus everything we purchased over the course of the year, so that's everything we had available for sale this year, minus what is left at year end, and the difference between those two numbers must be what we sold. Everything we had minus everything that's left gives us everything we must have sold, all at cost. And that's how we calculate the cost of goods sold deduction. Is your mind blown yet? So what do we need to do right now to fill out this part of our tax form? Let's take a look at that equation one more time. Beginning inventory plus all our purchases equals everything available for sale minus ending inventory gives us COGS. So for our tax return, we basically need to know two of these numbers in order to fill it out. We need to know our total purchases for the year and our ending inventory on December 31st. How do we figure out these numbers? Well, you may have been logging your materials and supply purchases throughout the year, so if you've been doing that, you're halfway there. Good job. But in order to figure out ending inventory, we've got to do the dreaded end of the year inventory count. And that means counting and measuring all your stuff. So the good news is, if you happen to have been using the Paper and Spark inventory cost and pricing spreadsheet this year, and you've actually been entering stuff into it, then you've been tracking your inventory and COGS amount throughout the year already. Now, I will say that you should most definitely still do a year-end count to verify and potentially adjust the numbers that the spreadsheet has been calculating for you. So just a real quick snippet, if you have the spreadsheet and you've been keeping it updated, you can check out your sales tab for the year and it will tell you your total materials and supplies purchases for the year, your ending year finished goods inventory, those are just your finished goods, and your ending year materials and supplies amounts. So those two last totals added together should give you a year-end inventory count, that 347 in this example. Now, again, I would always highly suggest that you go do a physical inventory count of your supplies and your finished goods that are sitting around, and make sure that this number that the spreadsheet is calculating for you seems reasonable. Okay, so you might need to adjust for waste or take things out for personal use. There's a lot of potential that you still might need to adjust the number that the spreadsheet's calculating for you. I don't want you to just rely solely on that amount. Okay, if you haven't been on top of your game this year and you haven't been using a system to enter your inventory purchases or measuring your supplies and inventory as you go, then you're going to have a lot of work right now to calculate those two amounts that you need for your tax return. First, I suggest you check out my bite-sized bookkeeping bootcamp for Etsy sellers. This bootcamp is a course that I designed to help you catch up on your bookkeeping work for the entire year. It's not going to help with just your inventory stuff, but also your accounting stuff as well. That means you'll be figuring out your total sales for the year, your refunds, and all your business expenses and deductions. Plus, it's going to help you through the easiest way to count your inventory at year end. The bootcamp includes all you need to catch up. That means your Etsy seller spreadsheet for bookkeeping work, and it's got a specially crafted template for counting, measuring, and entering your inventory. I've broken up all these tasks into bite-sized chunks so you can do this somewhat overwhelming amount of work in tiny baby steps. It's a lot more bearable. And you can check out the bootcamp by clicking the link here. And if you decide you'd rather do it on your own, that's totally fine. You'll just need to take some time to formulate either a spreadsheet or a log to help you do your year-end inventory count. I'll summarize exactly what you need to do for the counting process next. All right, so to do. Remember, our goal is to calculate two numbers: your total inventoriable supply purchases for the year and your ending inventory amount. Both of these numbers are going to be in terms of cost, okay? So not resale value or your listing price, but cost. So first, let's deal with your purchases. Now, in order to do that, you'll want to go through your receipts, your emails, or any documentation you have that tells you how much you spent on those inventoriable materials and supplies throughout the year. You'll want to enter this info line by line on your spreadsheet or log. And ideally, you'll want to enter a description of the item, its total cost, and the amount you purchased in an appropriate measurable unit. That might be the actual count, like number of beads. That might be the weight of the item. That might be square inches, or something else that makes sense to you. You'll want to break these entries down item by item. So don't just dump one receipt onto an entire line on your log. It needs to be material by material. And the total cost of the item should include any discounts that were applied, any sales tax you paid, or shipping paid if applicable. Now, later on in the next step, to determine the cost of what you have left at the end of the year, you'll end up needing to know the cost per unit of what you paid for. So I like to set up my spreadsheets to go ahead and do that step automatically for you. If you're using one of my Paper and Spark spreadsheets, or if you're in the bootcamp, the template that you use already does this for you. But if you're doing it on your own, you should try and add a section or a column that takes your total units purchased and divides it by your total cost to calculate your cost per unit, which is shown on this example spreadsheet. And once you've logged your purchases for the entire year, you can add all those costs together, and that sum is going to be your raw materials and supplies amount for part 3 of your Schedule C. Now the next step is to figure out your ending inventory amount as of December 31st. We can break this up into two pieces: figuring out what you actually have left, measurement or quantity wise, and then figuring out how much that remaining measurement or quantity actually cost you in terms of money. We need that cost or that monetary amount for your tax return. So go back to your log where you entered all those purchases and look at your shelf and go item by item through your remaining supplies. Find where you have entered them on your log if they were something you purchased this year, and see how much you have left. If you have none of that supply left anymore, that's good. That means the entire cost of the item is going to be part of your cost of goods deduction. You might have an item on your shelf that you don't have entered on the spreadsheet, and hopefully that's something that you purchased in a prior year and you had in your beginning year inventory already. So just measure what's remaining from that beginning year inventory amount. If you have some amount left in ending inventory that was purchased this year, you need to, or in a prior year, you need to measure it in the same unit you entered it on your log. So again, actual count, weight, square inches, etc. And then you enter that remaining amount in those same measurable units. And then you will want to multiply the quantity or the unit remaining by that cost per unit that we calculated in the prior step, and that will give you the cost, the monetary amount of what is remaining on your shelf. That's what's shown in that light green units remaining cost column on this example spreadsheet. So you'll add all those costs together, and voila, that is the cost of your ending inventory. When you're doing your count, do not forget to count not only your raw materials and supplies still sitting on your shelf, but also your finished goods that haven't sold as of year end. The cost of those items needs to be included in your ending inventory as well. All right, so here we are looking at part 3 of the Schedule C again. Now, based on those steps that we just performed, we should have the amounts that we need to enter on part 3 of your Schedule C. So that concludes the inventory crash course workshop. I hope that you found this super helpful. Feel free to share it with your fellow Etsy artists, makers, and creative entrepreneurs who might need help with this topic. If you still have questions, or if you need a little bit extra hand-holding, if you're not sure how to set up your spreadsheet or count your specific type of materials or inventory, I highly suggest that you check out the 2017 Bite Size Bookkeeping Bootcamp. You can join us there, get one-on-one help and all your questions answered, and get this process broken down into manageable baby steps so that you can get it done in time for the tax deadline. Again, you can check that out at etsybookkeepingbootcamp.com. Depending on where you're watching this, I've got the link provided somewhere for you too, so you can easily click on it. And if you have any questions about the bootcamp or this inventory crash course, you're welcome to contact me. Reach out by emailing me at hello@paperandspark.com. Thank you so much for joining me here today, and good luck on your inventory.